Today's bullseye pick is Raydium. Why have I picked Raydium? It's one of the front runners within the crypto market. It's already started its bull run 12 months ago. The reason that I'm bringing you Raydium today is because there's a huge indicator showing that Raydium's poised for the next leg of the bull run. Is it this, the break of the diagonal? Much more significant than that. We've got a big one today. Let's dive in. And this, guys, is what an early altcoin bull market looks like. October 2023. Let's measure this from October 2023. From its low all the way to its swing high, 2,084%. That's a 2,084% move. We've pulled back. We created a bull flag, and we've just popped our head above the diagonal. That's what we're going to be talking about today. How significant is this break? We're going to talk about bulls and we're going to talk about bears. We're going to talk about buyers and we're going to talk about sellers. And we're going to talk about candlesticks. So this is one candlestick. That one green candlestick is a battle between the bulls and the bears between one day. The bulls outweighed the bears during that day. There was more selling power than there was more buying power than selling power. And we popped our head up. So we've popped our head up. That's showing momentum. We've had a break of this diagonal. Let's talk about diagonal trend lines. For a diagonal trend line to be confirmed, you need 3 touches. We've had one touch here. We've had one touch here. We didn't get a touch here. And then this third touch, does this third touch count as a trend? So what you often see, guys, is something that they call a 1, 2, 3 fake out. You've got 1, 2, 3 fake out. It comes back into trend. You often see that time and time again. So that's something to be mindful of. Now, the diagonal and the horizontal trend line, let's talk about those. So each one of the candles we've talked about represents one day of price action in this instance. That's the session between the bulls and the bears. If it's a green candle, the bulls win the day. If it's a red candle, the bears win the day. And we can look at extreme highs by the volatility of the wicks to the upside and the volatility of the wicks to the downside to identify who really has control for that session for that day. So, right, okay, let's talk about this. Let's talk about this diagonal. So you've got a battle here between the bulls and the bears. This battle is sat at $3.29. We've come down. The bears have won this battle. They've pushed price right down, and then we've come back up for another try. We've come back up for another try, and this level is $2.75. Remember this level? That was $3.30. This is $2.75. We've come back down. The bears have regained control. The sellers have regained control. We've come back down, and we've had another try. What's happened here, guys? Who's got control at this trend line? So far, the bulls have got control at the trend line. However, let's talk about horizontals. The significance of a horizontal in comparison to the significance of a diagonal. Let's stick a horizontal trend line on there. Now, I want you to look at the difference between these buy orders and the sell orders at the horizontal levels and the diagonal levels. So you've got bulls and the bears fighting here, $3.30. You've got the bulls and the bears fighting here, $2.75. You've got the bulls and the bears fighting down here, $2.37. What have you noticed, guys? Each one of these levels in a diagonal is a different price level. That means that the bulls and the bears have got to adjust at each level, That means more eyes on the chart. That means that they need to do more. With a diagonal, what have you got here, guys? You've got the first high here, $2.75. You've come back down. You've got $2.75. You've come back down, and we've got $2.75. So what's that showing us? The buyers and the sellers only need to put a level of $2.75. The bulls want a confirmation at $2.75. The bears want a rejection at $2.75, whether it's there, whether it's there, whether it's there. So that is why horizontals work a lot better than diagonals, guys. And that's why you need to be mindful of diagonals. Right, okay, so what is this super indicator that I'm talking about, guys? What is it? Here we go. Let's stick this on here. You've seen this time and time again. It is a golden cross. It's happening today. It is happening now. So we've had a break through the diagonal. We've said that that's a weak break. We want to come back down. And the main thing is, guys, we cannot close below any of these trend lines. This is your bull market confirmation line. Price action staying above that should stay above that for the whole of the bull market. And we need to come back down and confirm that this level's holding. So what we're going to do is we're going to stick a Fibonacci on there. Then we're going to take a look at the indicators to find out whether we're overbought or oversold. So first and foremost, from the swing low, from this swing low, to its swing high, is there any levels that are going to give us any kind of confluence? We look at the golden 618, guys. Have we got any confluence at the golden 618? Let's stick that on there. 618 sat down here. What's happening here? you can see we were nearly rejected. We've come down, we've broke through, and then we've tested this 618 as confirmation. So we've tested that as confirmation, and that's a level that we expect to stick. So if price pulls back, I want this level, which was previous resistance before we broke the bull flag, to come down and hold as support. That level is the 0.5 level, $2.13. So we can get indications from the 618. And then we know that we've got this support here. We've got the support at $2.13, and we've got the support, even bigger support, at $2. So what's the possibility of breaking through the horizontal and then just continuing to the upside? If this happened, you've got a close above, you've come back down, tested this as support. Remember, that's $2.75. That's the key level in this instance, $2.75. If that happened, then that would be bullish for me. You'd expect to put in a new higher high. This would be a higher low and a continuation to the upside. However, this is major resistance at the moment. We need to treat it as major resistance, so we need to expect a pullback. How do we know that we need a pullback? We bring up the stochastic. Bring up the stochastic. Is it overbought or oversold? You can tell. Above 70 is overbought. Below 70 is oversold. So we're waiting for the stochastic to come back down into oversold. And what do we need to happen with price action? Price action needs to follow, price action needs to follow, price action needs to follow. And it needs to stick at these key levels, 618, 786, holding the moving averages. These are the key levels that we need to hold when we're pulling back. And we've got triple complements there. You've got the two moving averages, you've got the 618. So you've got triple complements there. You'd expect some kind of a support bounce at this level. Right, okay. I hope you found this video useful, guys. Let me know in the comments what you want me to cover next. We've got a Discord group that's completely free. That's where we keep up to date with crypto. There's some great guys in there. So go check out that Discord. I'll leave a link in the description below. If you want to see my full bullseye portfolio, I'll leave a playlist at the end of this video. And let me know in the comments, like I say, what you want me to cover next. I'll see you guys in the next one. Goodbye from me.